Is there a difference between trucking and trading? The answer is no, because they have parallels. When you think about runaway truck, think about runaway losses. We don't want either. As a truck driver, we don't want a runaway truck. As a trader, we don't want any runaway losses. Think about managing risk as a truck driver. We've all heard the term speed kills, but let me clarify, speed does not kill, right? It's suddenly stopping at speed that kills, suddenly colliding. The biggest way to control risk in a rig is with your speed. The best example of that is when you're going downhill on the side of a mountain. What do you need to do? You need to have your jakes in. First off, let's backtrack. You should have already stopped at the brake check. Check your brakes. As you approach the grade, you're not already traveling at speed. Your speed is already controlled and it's slow. You go into low gear and you manage your speed by pressing on the brakes within 5 miles of the recommended speed limit or whatever speed you're comfortable. If you have a runaway truck, that's simply a driver that lost control of its speed. It's not the speed that kills, it's the suddenly stopping that does. As drivers, we understand how to manage risk in that way, in terms of thinking of speed, right? So how do you transfer that into trading? The way you transfer that into trading is because the equivalent of speed in trading is size of what you're trading. So the bigger your size in a trade, the greater the chance of risk. The same way that I said it's not speed that kills, it's the suddenly stopping. It's not size that kills in trading, it's suddenly losing at size that kills. So all I'm trying to do here is demonstrate the similarities in terms of managing speed, which is equivalent to managing your size in trading, and showing that there's a bridge, there's a parallel between the two careers, even though they might not appear to be similar. But trucking is very, very, very risky. Trading is very, very, very risky. But in trucking, we have safety protocols, risk protocols in place to manage risk. Any truck driver that's worth his weight in gold or her weight in gold is a safety driver first, because they get the freight, the valuable goods to the destination. They managed risk very well over the road. And so that's what we do, is actually manage risk. You could be late, but so what if you're late, as long as you arrive? There's elements within trucking that if we carry over into trading and we really hone in on these risk protocols, it could be a smooth transfer, in my opinion. This is from a person who's actively doing it. I'm seeing the parallels of how I would manage my speed in a truck and bridge the gap to how I manage my trades, how I manage my money, how I manage my size. I hope all of that makes sense. And it just rained. It's a beautiful morning. I hope you're having a good day. I hope the views you get to see on the road as a driver is pleasant and plentiful. That's one thing that I miss about trucking, is that the constant changing of locations, being in a new place, seeing an area that you've never seen before. That was always beautiful to me. It always, sparked creativity. So I hope you drive safe. If you found this video valuable as a truck driver, just know I do one-on-one coaching. It's up to you if you want to learn more about trading. It's risky. Take a look at this chart. First off, let me bring your attention to this window right here. I've got $2,100, basically almost $2,200 in my trading account. The size of my trading account is going to fluctuate up and down because I withdraw money out of this account to pay bills. My intention is to be transparent with you, to show you as I grow this account, win or lose, you'll see it fluctuate up and down. Okay, we're going to set this aside. Okay, the top right corner is the daily chart of SPY. This left corner over here is the 1 hour chart. The bottom is a 5-minute chart. The bottom left. The bottom right is a 1-minute chart. The reason why I have all 4 of these quadrants is so that I can have a bird's eye view, big picture view of the road. You know how like in trucking that we sit high up and our vantage point, we could see further over the top of cars, further down the street. That vantage point, that's what we need to make decisions, to have a big picture view of what's up ahead of us. So this is the equivalent of me doing that. This is my big picture view. I scalp because I'm at home and I don't have to truck drive. I scalp. But when I was truck driving, I would swing trade. Scalp means I'm in and out. And I scalp on this chart right here, the 1-minute chart. But I keep these other time frames, these bigger time frames, in view to increase my vantage point. Now, yesterday, this is the trade that we're going to go over. I did 3 trades yesterday, actually. 2 trades I lost on, 1 trade I made money on. And the total result of that was $76 for the day. I was up $100, but then the third trade, my final trade, is what took me down to $76. But we're about to discuss that trade right now. My thought process going in, why I made the decisions that I made. That way I could help you at least gain some understanding how to think about trading. This is the daily chart. This green candle, where the bottom of it is where it opened, the top is where it closed. This green candle was a trend day, so it opened low and then closed high. So it was bullish. I mean, not trend day, it was bullish. Because yesterday, this candle gapped down, all of these people here who were long, who thought the stock was going to continue to go up, they thought SPY was going to go up, they're trapped. And their trade is underwater because it's below the open. Anybody that bought from here up, they're in pain. Their trade is losing. So that's important to note, because for them to leave their position, they have to sell. They have to become sellers, which would push this price down. So that's what I was thinking, right? And I've seen this play out where it's green, red, red. The next day is red. But this day was a reversal. So initially I'm thinking, because this price gap down at the open, everybody's here is trapped. Price is going to flush down. And this is the 1 hour chart. You see this bottom wick right here? This is the 1 minute chart. This is this. So the stock opened, SPY opened, and then it started to fall. And I'm like, of course, because this mid-body gap clear, this bearish mid-body gap clear, this is what I call this pattern. This is telling me the price should flush down because all of these people who bought are trapped and they have to turn into sellers to close their position. And so I saw this and I bought puts. Price breached, and then I got stopped out on this candle. So the moment I got stopped out on this candle, that means my thesis is wrong. Price was supposed to keep going down. Why is it coming back up? So once I left my position at a loss. I lost $13 right here. I said, well, if price continues, again, everything on the right, I don't see this as I'm thinking. All of this doesn't exist yet. I'm thinking in real time. So then I look at this top left corner right here. I'm like, okay, 2 things will happen. Either price will go up and attack this high. And if price breaks above that high, that means we're going up. The other thing that could happen is price comes back below this. So if price comes back down, breaks this line, and attacks this low, I'm getting back in. And sure enough, price came over here to the highs and broke above. At that moment, I'm like, okay, this was a trap for the bears. People who thought this was going to go down, price is actually going to go back up. This is a Nike check mark. So I bought calls. Now, I stayed in this trade for a while because I really thought we were going to attack these highs, yesterday's highs. So I waited in the trade. But ultimately, this trade, the value of my contract came up to about $200, but I ultimately closed it out for $100 in profit. That's part of the sacrifice of waiting for bigger runs up, where you can sacrifice some profits just waiting and it never happens. And you have to close out the position before the position turns into a loss. Where if I held this till the end of the day, if I held my calls to the end of the day, I would have certainly lost the value of the calls. So I waited long enough, and when I seen that my trade wasn't manifesting, you see how it created a high right here? It created a high, and it played around in this level. By the time it was at this level, I was like, It should have already done what it needed to do by now. It should have been explosive. And because it went down, I said, nope, I'm out. I got out somewhere over here. And then the last trade of the day, I got sucked in by this. I thought, okay, if we flush all the way down, we'll attack these lows. And this would be a nice little scalp. Nope. Price ricocheted right back up. Boom, stopped me out. That's what lost me $30 to end the day with $76. I think on my last video, this was like $2,000 or something like that. That was at the beginning of the week. So I basically grew the account by $200. Next week, I'm going to try to grow it even larger with adequate amount of size, because I don't want to speed, quote unquote. Now, if my analysis made sense to you and you would like one-on-one coaching where I can accelerate your knowledge and understanding about trading, swing trading, or scalping, you can book me for a 6 to 8 week ride along. But to start, you don't have to commit 6 to 8 weeks. You can try a 1 hour session at a time. And each hour, if you feel that, wow, you are learning, right? Then you progress further. You could do it that way. I also have the Truckers Who Trade community, and I don't have any friends because most guys, they try to bond through sports. I'm not into sports. I'm into stocks. And so I'd rather bond over stocks. And if you're a driver like me who's into trading, you don't really like talking about sports like that because you don't keep up, but you do keep up with the markets, join the Truckers Who Trade community.